from a claims management system, from estimating software, from even some data from our HR system as well. Just pull data into one location and quantify that data in ways that you couldn't really do before because the systems didn't talk to each other, and really streamline some processes from an adjuster standpoint, but also gather data for our clients, for our MGA clients, for our fronting carrier clients, that we can feed back to their underwriters.
Welcome to Insurance Shoptalk. This is the podcast where the world of commercial insurance gets a little closer to home. I'm your host, Eric Stein, and in every episode, we're taking a deep dive into the insurance industry. From the latest news and trends to in-depth interviews with insurtech experts, carriers, and agency newsmakers, we're covering it all. So sit back, tune in, and let's start the conversation. All right, happy to have David Prejeant with us with Alacrity. Did I do it right, David?
Yeah, Alacrity Solutions, absolutely. Good job.
Oh, that's crazy, man. I got to get the wording right. It's on the claims side of our business, and so we want to talk a little bit about some of the scenarios that are going on these days with using AI to commit fraud on the client/homeowner side, and personal lines and on commercial lines. And David, thanks for coming in. I really appreciate it.
Yeah, Eric, thanks for having me. It's always appreciate the opportunity to come in and talk about claims and talk about AI. We live in this world now where claims and underwriting and all of it is evolving like insanely fast. And it's hard to keep up. It's difficult to keep up with the changes as they just every day it seems like a whole new set of rules that we're playing by.
Definitely, yeah, it's definitely going quick. So David, why don't you give a little bit about, the company and your role and what you guys specialize in as it relates to claims in general, and then we can kind of deep dive from there.
Sure. Awesome. Yeah, Eric. So Alacrity Solutions has been in existence in one form or fashion for over 50 years. It currently exists as sort of a roll-up of a lot of different companies. So we acquired companies along the way, whether it be commercial auto adjusting companies, private auto adjusting companies, subrogation companies, temporary housing companies, and really a little bit of everything in between. We're an amalgamation of many years of acquisitions. We are not currently doing that at the moment. We're more focused on how to be the best at what we have. And so that's where we're currently sitting. I am the Vice President of Client Relations for Alacrity Solutions. It is a newer role that I have taken on. I have taken a step out of, you mentioned claims, I took a step out of the claims operations world, which is where I've spent most of my career, a career spanning over 20 years in and around and next to the industry. Started as a regular old field adjuster, looking at property claims, looking at commercial property claims. I'm from, if you can't guess from the name, originally from South Louisiana. So I am familiar with with catastrophe claims, familiar with hurricanes on a lot of levels, and have a pretty well-rounded scope of claims on a lot of different levels, including being the bad guy, the evil contractor who is trying to get more money out of the insurance company for a claim. So I've done a little bit of all of it.
That's great. And so and then the primary focus on your claim side is working with like MGAs, MGUs, carriers primarily?
I do. So I in the role I was in before, that was primarily our client base that I dealt with, was MGAs, MGUs. We had some clients out of the London market through syndicates with Lloyd's. We have some broker partners over in the UK that we deal with, and we don't work any claims over there. These are all domestic claims that are written by the Lloyd's market. But that's when we start getting into a little bit more of the specialized commercial lines and some special property, some more specialized industries that aren't just, a shopping mall or a strip mall or, a trucking fleet, that sort of thing.
Got it. And so the lines of coverage then you guys focus on are property, workers' comp a little bit you mentioned, and what else? Auto.
So we don't currently, that's one of the only things we don't currently do is workman's comp at Alacrity. I had the pleasure of handling workman's comp audits for a contracting company that I worked for in a previous life. So I am familiar with workman's comp claims, but we don't currently do that at Alacrity. So at Alacrity, we have an entire auto division, a specialty auto division. We have a nationwide appraisal footprint for auto, for personal auto, as well as commercial auto, and specialized inland marine. So if you have specialty equipment or a specialty type of vehicle, tractors or backhoes or whatever the case may be, we have a footprint to do field appraisals for that as well. Yeah, along with a commercial field adjusting nationwide footprint alongside that from a property standpoint as well, a structure property standpoint.
Gotcha. And I mean, who are some of the carriers you work with or have worked with?
So we work with Hiscox. We've done some work with we touch a lot of them. We work with USAA. That's one of our largest, if not our largest client. We work with a broker in the UK pretty regularly, Price Forbes, who is also kind of like us. They've sort of purchased up these other companies over the years. We've done some work with Chubb. We've done some work with Progressive. We've done some work with, over the last 50 years, we've probably worked with everyone, the
That's
big ones,
awesome.
the little ones, and everything in between.
Got it. So yeah, as far as on the AI piece and the fraudulent claim side, and then I don't know where you want to start, maybe on the homeowner side, but so talk a little bit about what you're seeing in that, what to look for as an agent, because we all want to, protect our markets.
Sure.
A, it's the right thing to do, and it's good as a good partner, but B, a lot of the agencies, are getting bonuses, contingency bonuses for lower loss ratios for their book of business and many of the different commercial lines and so on. So that's a big part of the, income, the net income of an agency. So we're always looking to help, we can pick up on it because many times the agent's the front line, for the claim.
Sure.
What are you seeing out there? What is happening in general?
You know, there's a lot happening. So, especially I think AI companies are doing their best. I want to think that they're doing their best to keep the guardrails on this thing. One of the things that I like to do to kind of keep a pulse on the fraud situation is obviously I've been in the industry for a little while. I know my way around. I know what I'm looking for. I know what documents are supposed to look like. So I've gone in and I've tested the waters. I've gone into some of these AI agents and tried to create fraudulent documents, not to use them for fraudulent purposes, but fraudulent documents so that I can see what can this AI model build? What should I be looking for? What are the things that separate maybe document A that's real from document A that was created for AI from AI? And to say that there's a specific, look for A, B, and C, that's tough. As an underwriter, one of the things we're going to look at is a loss run. If somebody's especially if you're going to write a new policy for a new client that's coming into your office, and you're going to want a loss run. You're going to want to know what that ratio looks like, right? Unfortunately, depending on who you're dealing with, a loss run is something that a lot of these models can build pretty easily. some things that you're going to look for is inconsistencies in number values. Um, the models aren't good at it. You'd think it would be great at math, right? You think, hey, it's a computer, it's going to get the math right. It's actually not. It gets confused, and it starts to, instead of say like building a table in Excel that actually functions, a lot of the AI will build a table in Excel, but it'll just paste its own answers in there, so the math doesn't work, right? So sometimes something as simple as just checking the math, and you go, hey, this math doesn't quite add up. That's usually a sign that there's something funny going on uh, from an underwriting standpoint. Um, it's, I guess for me, one of the things that I've been spending some time thinking about is what what are we going to how are we going to build an AI model to combat the AI model that's creating some of this stuff, right? Because
Right.
ultimately, and that's something you can do. You can take it, if you're an underwriter, you're sitting in office, you get a $20 million portfolio come across your desk. I mean, you want to get that right, right? So my thought, so the thinking behind it is, well, we're going to run it through AI too. We're going to put it in a model and say, hey, what do you think about this data? Does it work? Is there something funny? Do you see something that doesn't add up? What am I missing? You know, and using a model for that is something that can be beneficial from an underwriting standpoint. I think that the next couple of years are going to be challenging. They're going to be challenging for underwriters. They're going to be challenging for claims professionals as we all figure out where AI fits as far as helping us, where AI fits as far as making our job harder. We're already starting to see some of that with fraud and some other things. Lawsuits are becoming more complicated because of AI, and not just because of fraud, just because of some of the capabilities that the AI has. So some different things that are happening. It'll be interesting to see how they evolve.
Yeah, I'm thinking about workers' comp. I know you don't really do that, but in general, like if you mentioned that the loss run comes in, the numbers aren't adding up, you sort of kind of compare it to the experience mod. If you
Right,
see that they claim if you're smart, they're smart, they know to leave claims on there.
right,
If the mod is high, then you can see there's like that correlation. So I could see AI really helping, compare the experience rating to the loss information, at least
yeah,
catch some big ratio differences,
absolutely.
there. And then, like you said, checking the math. What about on the homeowner side? Let's talk about claims. What are homeowners using this for to get a fraud? Hey everybody, it's Eric. I just want to pop in for a quick announcement. Exciting news. I just launched my new book on Amazon. It's called The Blueprint: An Insurance Agency's Unconventional Rise to the Top. And it goes through a little bit about how I built the agency Insurance Solutions since 2009 to today. And the blueprint in terms of how I actually did it with the tech stack, the offshore, nearshore talent, and digital marketing techniques that I use. So pick up a copy today on Amazon. Thanks, guys. A fraudulent claim and like
So
through.
I I like I said, I want to know what it can do, right? So I'm going to go in there. I've been doing this for a long time. I know what I need to work a claim. So the question becomes, what would I ask a homeowner for? I'll ask him for A, B, C, D. What would a contractor present to me? All right. I had I'll tell this. I had a really odd weather report come across my desk for a property, for a weather damage claim for a homeowner. Okay. And it didn't come from the homeowner, it came from a contractor. I've been a contractor. I'm not talking bad about contractors. I've worn that hat. That's not what I'm doing at all. I'm saying this particular contractor submitted some information to us and some documentation that for me didn't pass the smell test. And it was a weather report. Okay. It was a weather report that showed a data loss that was reported by the homeowner and the contractor, and it showed weather that aligned with that date of loss, that aligned with damage that the contractor was presenting. It didn't align with the report that our field team returned to us. So you've got a contractor that's presenting damage from a storm. You have a field report that says, I don't think that's storm damage. But then you have a weather report that says, oh, no, there was bad weather. Here's a weather report that says it. And so then, if you're in a hurry, if you're an adjuster that's slammed like a lot of adjusters these days, and you're just trying to keep your head above water, you might look at that report from that contractor, that weather report, and go, oh, hey, look, they've got a weather report. Here it is. It says there's damage. It says there was a storm. We know, oh, there was a hailstorm. That hail damage lines up with the hail damage that the contractor said, but it doesn't really line up with my field adjuster's report. So I'm confused. If you don't double check that weather report, let's say run another weather report, run your own independent weather report, and then your independent weather report comes back and says, there was no hailstorm on the 17th. This hail report says there was hail damage on the 17th. This one says there wasn't. I'm going to tell you something. AI probably made this one. I'm not saying it did. It's highly likely that it made that one. It's highly likely because it looks exactly like a weather report. The difference is it says what the person who generated the report wants it to say, not what actually happened at that property on that date of loss. So it's a strange time in the homeowner's claim front from a fraud standpoint. When something like a weather report that used to be, I don't want to say gospel, but as a homeowner's property adjuster, that you were hanging your hat on that weather report a lot of the time. And for them to be so easily presented that are completely fictional, that look 100% legitimate, it's going to bring up some interesting challenges. It already is bringing up some interesting challenges if you're not paying attention.
God, it's just like you've got a third party check, and I guess AI can do that pretty easy to do the check of the weather on this date, separately so that you could compare it.
It could. Your field team could do that. Your desk team could do that. You could have an agent in the back, an automated agent in the background, like you said, that is running that report for you and saying, hey, this doesn't make any sense. Now we're starting to go down the rabbit hole of AI training. What can you train the AI to do? What can, that's a whole different thing.
Gotcha. No, that's crazy.
Yeah.
What about, so that's from the contractor side. Are you seeing anything from the homeowner side as an example, or business property owner side to try to submit things that are from AI, or not? It's not gone down that line yet.
Yeah, no, it has. We've seen some, AI can generate things like we talked about, a loss run. I don't want to give anybody any ideas, but documents that are required for, say, a business interruption claim can easily be generated if you know what AI tools to use, and you know the right prompts, and you know how to tell the AI what you need and how to make it authentic. You could easily create the business interruption claims are the ones that come to my mind first. You can generate 3 years worth of books. Like that. You can just make it for you. Hey, you tell it what you do. Hey, I run a clothing store that was next door to a property that caught fire. Generate me 5 years worth of inventory, generate me 5 years worth of sales. And it can do it. It can do it in a matter of minutes. So
you got to then go back and check bank statements And
Bank statements, tax returns, is that what they filed on their taxes? Did they file their taxes? I mean, there's a lot of, you know, or then back in the day it was, oh well, yeah, but we do a lot of cash sales. Well, are you sure you want to put that down on paper and give it to me? Because your tax documents don't line up with that. So yeah, it's made the auditing of business interruption more complicated. It's made the auditing of, if you have any sort of inventory that you're claiming, loss of inventory, from a commercial standpoint, if you're doing that sort of thing, if you're into warehouses and inventory, that's tough. It's, hey, can you give me a bill of landing for, the 17 pallets of widgets that you just got in that you say burned in the fire? Yep, I sure can. you know, Literally minutes. It can make that for you.
Yeah, yeah, I think of that. So,
Yeah.
like, I guess there's like a whole new training system that needs to be done with your adjusters and your claims adjuster, your field adjusters and claims adjusters to know how to spot these things, almost like a cyber training that we have to do to keep our cyber policy in place,
Hmm.
to teach about phishing and
Oh yeah.
scam and all that.
Yeah.
I guess there's another that idea for somebody is to create a whole training module on AI fraud or something, you
We're
know?
going to have to, and it's already something that we're really actively working on internally. We have to. We have a duty to our clients. We have a duty to the policyholders. We have a duty to the contractors. It's just as much as a duty to the policyholders. If we get into 5 years of rampant fraud because of AI, what do you think is going to happen to premiums? And so we have a responsibility to train our folks and to consistently train our folks and to make sure that fraud is always at the forefront of your thought as an adjuster. We're just having to change the way we think about it. Things that didn't used to be possible. Um, and it happened with computers when Word documents you could make an invoice from a Word document. They didn't normally look very good. You could usually sniff those out pretty easily, but it's on a whole new level now.
Yes, and it's fast and a large volume. So you got, like you said, you got to create the tools, not only the training of the adjusters, but the tools to combat it.
Absolutely. One of the things we have an initiative that the higher ups have coined Alacrity Intelligence. That is our internal AI infrastructure that we're building. We have some partners that we're building that with. But what that is that is a layer of AI that exists on top of all of our systems, right? So, and it's already doing this to a certain extent. We've already implemented this, not all the way, but we've begun actual implementation of this. And what this is doing is, this, you probably worked for an MGA or a carrier or someone before that's acquired companies, right? You're an MGA and you're going to buy this other MGA, right? But they use a different software than you used, or you get this MGU and they've got a cover holder and their policies are all in this different system, right? System A doesn't talk to system B, system B doesn't talk to system C. So you've got all this fragmented data, okay? That's really hard to get a clear picture of what's going on fully, right? Claims are the same way, especially when you're in a situation where you're a roll up of all these companies. Is you got this company that uses this system, you got this other company that uses that system. None of the systems talk to each other. So the overarching goal of Alacrity Intelligence is to be able to pull data from all of our systems in real time, from a claims management system, from estimating software, from even some data from our HR system as well. Just pull data into one location and quantify that data in ways that you couldn't really do before because the systems didn't talk to each other. And really streamline some processes from an adjuster standpoint, but also gather data for our clients for our MGA clients, for our fronting carrier clients, that we can feed back to their underwriters on a granular level that we couldn't provide before. You could, you kind of could, but not granular claims data the way we're talking about putting it together and feeding it back to our clients.
No, that's good stuff. I mean, that's got to be impressive to, your prospective customers that you're working with, vendors that you're carriers, MGUs, whatever, that you're working with. You've got that expertise that you're building in, to kind of detect these things and then how to respond, right?
Yeah. Well, we've got the data, right? So there's a lot of, tech companies that are getting involved in the claims business, and then there's claims companies that are investing in AI. And that's what we are. We're a claims company. We have the data. We have 50 years of claim data, right? That's the question. Who's got the data, right? And so we've got a lot of it, and we feel like we can use the AI to not just leverage it as a tool to fight fraud, to not just leverage it as a tool to help our adjusters, to make sure that our adjusters are doing the things that humans need to be doing. If your business just burned to the ground and you're a small business owner, that adjuster needs to be answering the phone when you call. That's the important piece. That's what they need to be doing. They don't need to be uploading documents to a claim file. It's 2026. We don't need to do that anymore. So that's where our focus is. Our focus is making sure that humans are doing human things, picking up the phone, when your business burned to the ground, and making sure that you understand the process, making sure that you know what the next steps are, making sure that we're clear about what we're going to do. We're clear about what the carrier is going to do, so the important stuff.
Right. Have you seen the fact that you do have to do these double and triple checks? Is it slowing down the cycle times of the customer experience at all?
Yeah,
That you're seeing?
it can. It's fraud investigations always slow down a claim, no matter what. They always have. They always will. But it's definitely dragging down the cycle time. You guys, the MGAs and the MGUs and the carriers, what do they want, right? They want claims closed. If we pay it, let's pay it. If we owe it, let's pay it. If we don't, let's close it. Let's get it out of here. Let's get it off the books. So yeah, it's been an interesting ride from that standpoint, as far as that goes. Yeah.
Yeah, yeah, I don't know if you can pick it or not, but it's like trying to predict the future. But do you think what's more of the threat? Is it you know, is it for this, like, is AI ultimately more of a threat, or is it more of an enhancement to the claims process? And because you're gonna ultimately pick
Sure.
up these frauds, fraud claims, but you should be able to process faster if it's just a clear cut scenario now, right?
Yeah, I don't think that that's a black or white answer. I don't think it's A or B. I think it's both. I think the answer is it's a tool. It's not going anywhere. I mean, we could probably agree AI is not going anywhere, right? I mean, it's it's here to stay. It's like when, I don't know, I think about it like when the personal computer came out. Uh, I'm I was in the generation where everybody didn't have a computer in their house. We had a computer in our class, our school had a computer, but like we didn't have one at home, right? It was crazy to think that you would have a computer in your house, much less a computer in your pocket, right? And so, like, oh, this computer. So there's a lot of people, oh, this computer thing, it's just a fad. Nobody's going to use this. It's not going to catch on. They didn't go anywhere, you know. And I think AI is going to be the same way. I don't think AI is a passing fad. I don't think that it's. I'm fairly confident that it's not a fad. That it is here to stay, and that the people that can figure it out the fastest are going to be the ones that lead the pack. The ones that can figure it out for underwriting, they're going to be the ones that lead the pack. The ones that can figure it out for claims, they're going to be the ones that lead the pack. The ones that can figure it out for subrogation, they're the ones that are going to lead the pack. I think that's going to be true on all levels. You guys
Yeah,
in the underwriting world, you're going to see, if you can get those loss ratios down and you can keep them down, and you can do that through better underwriting. I don't ever think I feel about underwriting like I feel about claims. I don't think there's ever going to be a time when there doesn't need to be a human in the loop for underwriting, right? Um, but I think it's going to make underwriting significantly better in the long run. I think it's going to make claims significantly better in the long run. I think there's going to be bumps along the road, but I think ultimately we're all going to be in a more efficient world of underwriting and claims. I think that the volume of efficiency will offset the the fraud uptick. But I think that if you get flagged for fraud, you're going to have a real hard time getting out of it. I don't think that that's going to happen. You're not going to be stuck in this. So be careful. That's what I would say. Make sure that you're not doing anything that's even a little fishy. Because if you get pinged, I think you're going to have a real tough time, and it's going to be a long road to get away from it.
yeah, it's like a black mark. Yeah, and then sort of in between what you are talking about from an underwriting point to an actual claim, I've been working with a risk consultant service that I had a relationships with now for probably 15 years, developing tools using the AI pieces to take let's say, loss information on going back to workers' comp, which is kind of our
Sure.
specialty, but taking that data and quickly analyzing where the top three problems are, with those claims and identifying that, and then coming up with a risk mitigation plan specifically to attack that because, you don't want the generic risk management going on. We
Sure.
just focus on what the problems are and then creating a real detailed, action plan for the risk manager to deploy with the client. That's the big important part. You got the data, but now structuring it with a risk manager, a human, is an expert, kind of like your claims department and your adjusters, right?
Right.
To implement it and also careful of doing it in a way that is not overwhelming to the client and their business, right? And
Right.
so,
I'd be
yes,
willing to bet that you can do that a lot more efficiently and faster now with the help of AI. I'd be willing to bet that you can get those analytics pretty quickly, and even spit out a first draft of a plan, of a mitigation plan, probably pretty fast. If I had to guess. I'm sure. You tell me. You're probably going to tweak it a little bit, but I bet you can put one together pretty quick.
yes, yeah, especially it gets the rhythm with the
Yep.
learning and the memory of what we're doing in the work comp arena, and then trying to get it almost gives too much information. You have to almost shrink it down because
Yep.
like I said, it gets overwhelming. But I've been testing this now with some insurance agents as I give them the proposal for the workers' comp on the wholesale side of things. And then it is an additional service, an additional fee. But if you've got a restaurant with a 2.15 mod, they're
Mhm.
going to be out of business soon if they don't go
Sure.
ahead and then attack the issues because their cost of insurance is going to be, way out of whack, for their industry, double, triple of what they should be paying. So they need to get on it and clean it quickly, right?
Hmm.
Um, and then the carriers come in with the uh, like a nurse triage sort of reporting line, some other tools that help the client kind of built in, but they can't usually send out risk managers to every client, especially if it's
And
a
so is that
lower
what you guys
premium.
are doing? You would actually put boots on the ground and go with them and work, because that's the hard part, right? So So you can be great at writing a risk mitigation plan, but who are you handing it off to? Whose hands are you putting it in at the company? Like, I don't mean this in a negative way, but can they do it? Can they execute the risk mitigation? Do they know? Do they
Right.
know?
No, you definitely can't just give it to the client. Obviously, they're having the problems. Now, there's
Right.
some things that are common sense, they could implement, like not in a restaurant, the more padding for non-slip floors if they're having injuries of fall, and things like that. But there's scenarios. I know the owners know what to do, and they just kind of got busy making the donuts, right?
Yeah.
So, but yeah, you're right. The good news, like we couldn't do it as a wholesaler because we don't have the infrastructure, but the partner we have has nationwide boots on the ground to
Wow.
assist and to keep the cost lower. And thank heavens that's the one positive of COVID. Everyone in the in the US is open to having a Zoom meeting very easy
Right.
and set up for it. Um, but so that's how to implement, and again, and do it also in conjunction with some video learning tools that you could have the supervisors take as training based on what those top three claims are, whatever their
Sure.
problems are. That's what I like about the AI models. You can really quickly define what the top areas of concern are, and again, create that plan. So anyway, I kind of went off on a tangent there, but
No,
the point, I think that's a positive use of the AI
absolutely.
with
Absolutely.
humans, kind of like on the claims side, where you're putting some intelligence in now that can really save some time with the and let the adjuster and or claims on a field and or desk ask the right questions now,
Yep. Yeah, it might have taken you, what, 2 weeks as an underwriter. If you get a loss run, you got to spend the next 2 weeks going through this loss run, this 3-year loss run for, Sam's Pizzeria or whatever, and trying to pinpoint like, hey, what's happening here? Where are these losses coming from? Why do they keep getting pinged? How come we keep losing? Whatever the case may be, you can if you've got some AI that exists in a bubble, then you can run that through there and say, hey, tell me what's going on here. Tell me what and it used to take a human weeks or a week or 2 weeks. The AI can do it in probably a couple minutes, I would guess. We
Correct.
can do it with claims data. We can do it with claims data. Hey, tell me if there's a particular neighborhood where we're seeing a larger uh, hail claim count, in a particular state, and it'll say, oh yeah, it's right here. Instead of having to dig through files or even just filter a report, it can just tell you.
Yeah, especially if it's a larger client with a large
Yeah,
volume of, 300 pages of claim data, right?
yeah,
That's like you said, that does take a couple of weeks, right?
yeah. Somebody used to have to comb through all that, right? And you can't bind and you can't do anything until you really have a good idea what that looks like. And it's really that AI is going to help you. That AI is going to help you with that.
Yeah, and then from a sales and marketing perspective, we have now an action plan that you could show an underwriter and show how they
Mm-hmm.
engage this service to
Yep.
start the cleaning process, and it could help them get an approved quote just to
Yep.
get coverage, where maybe the one that didn't offer that, the clients that aren't on top of it saying, okay, I get it. I need to do these three things, to clean my ship up.
Yep.
They're going to get better treatment from the carriers with price and or acceptance, either hopefully on the front end, but if not at the renewal period time, because if it works the way it should.
Yeah, you made it easier for the underwriters to take it to the reinsurers too. Hey, look, they're going to fix it. Here's the plan. They're already executing it. They've hired this firm. They're already working on it. You want to reinsure this for us? It just, makes that whole chain go a lot faster. So yeah, claims is the same way. There's things that are 1,000% happening faster because of AI.
P&C agents, have you run into Byberg, which is a Berkshire Hathaway company quoting workers' comp for either your prospects or clients? Well, great news. Insurance Solutions, a national MGA, has an appointment that is set up to allow you to quote, bind, and service Byberg at your agency. And the coverage is in all states. It's A-rated. Startups are even accepted. There's 125,000 maximum premium. And some of the tough industries they write are construction, transportation, that includes towing and parcel delivery, manufacturing, security guards that are armed and unarmed, motor mediation, and many more. So go to our website at insurancesolutions.net, click the Get Appointed link. We'll get you logins for you and your team, and can set up a webinar for training if you'd like. Also, feel free to email info@insurancesolutions.net, and I can handle the submission myself, or call 770-402-5343. Be glad to speak to you and give you more detail. Thanks. Yeah,
But
and
then
like
there's
what you're speaking about on fraud, and like what I've noticed recently, there's a lot of repeat claimants in workers'
Mhm.
comp. I didn't
Oh
even
yeah.
realize it. You would think that's that just happens very randomly, but it's like as we've been doing some testing, I've been seeing that. So back to your scenario of
Yep.
fraudulent claimants, that's just a human doing something fraudulent in that environment. But
Sure.
I'm sure that they could maybe
Or a
fake.
pattern that you wouldn't see. If you're jumping from insurer to insurer, you might not have full access to that spectrum of claim file. You might not have a deep dive into that claim file where you can't see that granular claim data through carriers, right? And so even like a, even like a full blown loss run from a service might not give you that. Bill Smith keeps getting jobs at restaurants and keeps slipping and falling. We might need to keep an eye on Bill. Hey, you know,
Exactly, job retraining, HR gets involved, progressive discipline, whatever is needed, right, to stop the madness of the repeat of
sure.
insanity here. But yeah, so I see then a lot of these tools sort of interacting together. You've got your side of the business for the claims handling, and then like you were saying in the underwriting piece of the puzzle, using some of that data to make the right decision, from a
Mhm.
acceptance or non-acceptance perspective for the carrier. And then overall just keeping premiums lower to
Sure.
to prevent just like at the commercial, as commercial auto is just extremely tough right now for
I got 6 emails today titled soft market something or other. So yeah,
yeah, and then hard market for the commercial auto.
hard market here, soft market there. Yeah,
Right. Because of claim issues and just how much the costs have increased to repair, have just skyrocketed. So anyway, what you're doing is phenomenal for the industry because you're catching things, building tools to catch things, training to catch things on the claim side that can keep markets steadier. Because like we hate it from an insurance agency perspective, because we lose options for the
sure.
client, because the carriers are just pulling out, just like in the fire prone areas for property, right?
Yeah,
So,
wildfire.
right,
Well, I
right.
think that I think that a lot of people that don't understand that the underwriting in the claims world, are not adversarial. We have a symbiotic relationship, and the more that we can work together, that we can be on the same team, and sometimes it's not going to work. You might have a $12 million commercial client that he files a claim and it's just not covered, and I get it that you write 12 million in premium for him. I understand that, but policy doesn't cover it, and so it's just we have a symbiotic relationship. The underwriters and the claims teams are not at odds. They're very much on the same team when it comes to the overall goal uh, of the industry. And I'll also say that what I think we're becoming, at least what we're becoming, and it sounds like what you're becoming too, is I think about it like an orchestra, right? Like I don't know how to play the guitar, I don't know how to play the violin, the conductor of the orchestra probably doesn't know how to play every instrument in the orchestra, right? But he knows how to make them all come together, and he makes them all know how to sound good at the same time. That's his job. And so that's kind of our job now. Our job is to be the conductor, and each instrument is a tool. Maybe it's a claim system, that's the violin. Maybe it's an AI tool that is the tambourine. I don't know. But it's our job to take all those pieces in the claims world, and it sounds like in the underwriting world too, to take all those pieces and put them together in a way that makes sense. Whether it's fraud detection or underwriting or claims analysis or loss ratios, we've got to be able to conduct these tools together in a way that people can understand them, and we can use them to make things better, hopefully.
Yeah, absolutely. And the more you can group it together, you get more defensive, and put a shield up so that some of these fraudulent scenarios don't get through,
Right.
which is the big key. Well, this has been great. Like, if anyone has questions and needs to reach you to talk about fraud and AI, or maybe they want to talk about claim services in general, there's
Sure.
some things that you offer. What's the best way to reach you?
You can get me by email. You can catch me by email. You can get me at D Prejeant. I'll spell that for you. Prejeant at alacritysolutions.com. You can get me there. You can find me on LinkedIn. That's probably the other easiest way to shoot me a message on there. And yeah, I'd love to talk about fraud. Well, I wouldn't love to talk about fraud, but I'm happy to talk about fraud. I'm happy to have a discussion about claims in general.
No, that's great, man. But I think we need to have you back on in like a year from now, and then get like even more updated what you're seeing, in the property world and other. So, got to definitely keep following up with you.
Yeah, there's a big InsurTech conference coming up. I'm not sure when you'll air, but I'll be there. I'll be there for that. So we'll see. We'll
Is
see what they
that
got.
the ITC in Vegas, InsurTech Connect, or which is
That
that?
one's, I think, in October. This is
Okay.
InsurTech Insights in New York.
Got it. That's right. I heard about that one from one of
Yeah,
my
that's
other
a big one
guests.
too.
Yes, they're big there. I heard. I haven't been to that one. I have been to the one in Vegas, but
I think we'll
um,
be there. I think we'll be there too this year. So
excellent. Well, thank you, David. I appreciate it again, and I appreciate you coming
absolutely.
on. And this was great.
Thank you so much, man. Have a great day, guys.
Thanks again for tuning in to Insurance Shop Talk. If you enjoyed our deep dive into the latest trends, please don't forget to like, subscribe, and hit the notification bell so you never miss an episode. Until next time, I'm Eric Stein, and this has been Insurance Shop Talk.